Hi, students, and welcome to Accounting 1115, Computerized Accounting. And this course, we will be utilizing QuickBooks Online. You could have either have purchased the book in the bookstore, or if you already have a Cengage subscription, you can also use the ebook through the Cengage subscription as well. The ebook will be the 5th edition. I believe in the bookstore they're selling the 3rd edition. There's not much difference between the two of them. Now, I will say this much. I did download PDF files for all of your assignments. So you don't have to worry about assignments through Cengage. Your assignments are actually going to be done in QuickBooks and then submitted via Blackboard. So let's go into the first learning module and let's open it up and look at it. So each learning module, you'll have 2 weeks to complete your assignments. If you look here, it outlines what your assignments are. You are to read chapters 2 and chapters 3. And then you're also to complete the practice cases using the test drive module. Now, this is outlined in your book. It details how to access test drive in your book. And in each book, it has practice cases to do in the test drive. And this is just to get you familiar with QuickBooks Online and allow you to kind of play around in QuickBooks Online without actually affecting any of your companies that you're going to be utilizing for your actual assignments. I have a link to the QuickBook test drive, so you don't have to worry about typing it in. The book does give you the URL, but like I said, I'm going to give you a link. And then also a link to the ebook. So if you have a Cengage subscription, you would only have to just click on the link and it should take you straight to the ebook. Okay, so real quickly, we're going to look at chapter 3 and just kind of go over what I mean by when I say the test drive. Now it does give you overviews, etc. So this is what I'm talking about when I say the test drive. The majority of the information in the book is you going through and doing the practice cases. So like I said, you have a link here. I also provide you with a link in Blackboard as well. You don't submit anything from these practice cases. This is literally just for you to kind of be able to go into QuickBooks and kind of get familiar with QuickBooks before you do your actual homework assignment. But as you see here, it kind of gives you step-by-steps on what it wants you to do for each practice cases within the book. Kind of gives you a breakdown and explains what you're doing and why, etc. So when you get to the end of the chapter, you have your cases. Okay, now in your cases, this is where you're going to actually go into the companies that you've already set up. Now the video on how to set up your companies, I've already done and linked to the Start Here module in Blackboard, walking you through how to set up each of your companies. So again, you will need to set up 2 companies. So I sent out to each student 2 emails for company A, you will use for case 1, and company B, you will use for case 2. Now, I do it this way because look here. All right, now the following cases require you to open the company you created in chapter 1. So we've already created the companies. That's why we skipped chapter 1. We've already done this. And that's why we start with just chapter 2, because we've already done everything in chapter 1. Each of the following cases continues throughout the text in a sequential manner. So for example, if you were assigned case 1, you will use the file you modified in this chapter in all the following chapters. So what that means is case 1 in each chapter of the book is a continuation. So for company A, you will use for all case 1, and for company B, you will use for case 2. So each case has a set of steps it wants you to complete within QuickBooks, and then it tells you to run 2 reports. So in this video, we're going to actually start with case 1 in chapter 3, and I'm going to walk you through how to do it. Now let's go back to Blackboard. So in Blackboard, you have your assignment. So you have chapter 3, case 1 and chapter 3, case 2. And if you see here, I have a PDF. When you open up the PDF, it gives you step-by-step instructions on what it wants you to do. So again, if you bought the textbook in the classroom, that's fine. It's not going to hinder you. And if you're using the ebook through Cengage, that's fine. Either one is totally acceptable. The only differences are the cases at the end of each chapter may be a little different between the two different editions, but that's not a big deal because I provide you with the case and the steps that I want you to use via PDF and Blackboard. Okay. So with that said, let's go into what your QuickBooks should look like when you get each company set up and started. Okay. So I'm the instructor, so my screen's going to look a little different from yours, which is fine. But you should have a case 1 and a case 2. So let's go ahead and open up case 1 and we'll see what it looks like in QuickBooks. It's going to make me log in probably. No, okay. All right, so this is how it should look when you initially log in to your QuickBooks Online. So let's go back to the PDF where it talks about what it wants us to do. So first of all, your case 1, what you're doing is you're setting up a company that's a distributor of surfboards, and you're located in La Jolla, California. I've actually been to La Jolla. The company does not collect sales tax as all of its customers are resellers. So it also tells you to leave the industry text box blank. So when we set up our businesses, we did that already. You begin businesses in 2023 and want to use QuickBooks starting January 1st, 2024. So all of our beginning balances are going to be dated December 31st, 2023. So it says you must make changes to your company based on what you learned in the text using sample company. Okay, so you are to make the following changes to the company you created in chapter 1. So the first one it wants you to do is modify your settings. So under company name, we've already done this part right here in A. Modify the company name to case 1 and then your student name. And I'm not requiring you to replace it with your student ID. Your name is sufficient. So if you look here, I named my company case 1, Hangison, Mary. And I believe we went over doing that when we set up our companies. We went ahead and named it. But if for any reason you did not do that when you initially set up your company, like maybe you missed that step or you misunderstood, you can literally click on the hyperlink, come over here and click on the edit button, and you can change your company name. Okay. All right, so since we've already done the company name, let's go down to company type. It says it wants you to modify the tax form by selecting form 1120 from the drop-down list of forms, leave industry text box blank, and then click save. So So the first thing we're going to do is we're going to come over here, and what I clicked on is I clicked on the gearbox. Okay, and it's going to bring up a bunch of information. So the first thing we're going to do is go to account and settings. All right. Okay, I had to get rid of that pesky little drop down box there. So let's go back to what I said to do. You click on the gearbox and you're going to go ahead and click on account and settings. Okay, so we've already made sure that we had our name. See, there it goes again. Next thing we're going to do is it says to select from the drop down menu 1120 form for 1120, which is a corporation. Okay. And so we can just go ahead and leave the industry blank at this point. So if anything, try to autofill, just delete it out. But the only thing we want to do is come down here to the drop down menu and select form 1120. And then leave the industry text box blank. And after that, we click save. Okay. The next thing it says is to go to sales and turn on track inventory quantity on hand. All right. So we come over here and we see some selections over here to the left. So we're going to click on sales. Okay. All right, so what the step asks us to do is decide to turn on track inventory quantity on hand. So we come over here to products and services. We can see track inventory quantity on hand. It's already been turned on, but if it was turned off, you just basically click on the little toggle. Okay, so that's how you would turn it on and off. And once you're done, you can click save again. All right, the next one, it says to go into expenses. All right, so we come over here and we see over here again our selections. We click on expenses. So what does it do? Want us to do expenses? It wants to turn on track expenses and items by customer. So track expenses and items by customer. It says to turn that on. What else does it say? Turn on make expense and items billable. Make expenses and items billable. We'll turn this on. No markup, track billable expenses and items as income in a single account, no sales tax charged. Okay, so let's go back over here. Track billable expenses and items as income. It's already been checked. In a single account, checked. And we're not doing a markup and we're not doing sales tax. So we will not check those boxes. Okay. Default bill payment terms to net 30. So it says here, default bill payments. So what we'll do is we'll select net 30. All right. And then once we're done with that, we can go ahead and click save. The last thing it wants to do is turn on use purchase orders, but no custom fields. So our purchase orders are already turned on, so we don't have to make any changes there. The next section is payments. All right, so it says no changes in payments, so we're not going to bother doing anything with that. And the last one is the section called advanced. So let's come over here and we'll go to advanced. The first one it says is time tracking. I want to turn on add service field to timesheets and turn on make single time activity billable to customer. All right, so let's look for time tracking. Okay, so this is an update to QuickBooks Online. In your instructions, it's telling you to go to advanced to turn on time tracking, but they have added a tab in here called time. So you don't need to go to advanced. You won't find it under advanced. So what you'll do is you actually click on time. So again, this is a new tab they've added to QuickBooks that's just not been updated in the textbook yet. So what it wants you to do is it wants you to turn on add service field to timesheets and turn on to make single time activity billable to customer. So we're going to turn on the show service field and allow time to be billable, turn that on as well. So then we'll just click save. So they're both turned on. And we can go ahead and exit out of accounts and settings because we are done with that. All right, so what is the next thing it wants us to do? All right, now the next step is to create new accounts and related to beginning balances as follows. So we're going to be doing some updating bank account balances. So we're in QuickBooks. We're going to go to accounting. All right. So if you look right now, we have a standard chart of accounts. All right. These are just standard. And if you see right now, they have a 0 account balance. So we're going to be doing at this point in this step is we're going to be updating some of those. So the first one, the account type is going to be bank, detail type checking, name checking, balance 25,000, and everything's going to be as of December 31st, 2023. All right. So what I do over here is I go ahead and click new. So the first thing I'm going to do is the account type is bank. All right, is checking, and it automatically updated the name checking, which is good. When do you want to start tracking your finances from this account? Choose one. So what we will do is we will choose other, and it'll allow us to put in a date. Okay, what is your account's balance as of this date? And it's going to be 25,000. All right, so once this is done, you can go ahead and click save and close. All right, so if you see here, we have our first account set up. Now, what is the next one? The next one, it's fixed assets, detail type, furniture and fixtures. They want us to be named original cost, and it's going to be 40,000. So we'll go back to our chart of accounts. We're going to click new. This time we are going to click on this drop down menu, and we're going to click on fixed assets. All right. Now, what was the detail type? Furniture and fixtures. Okay, so we'll go ahead and click over here. We'll look for furniture and fixtures. So we're going to hit this other drop down menu, and we're just going to scroll down till we see furniture and fixtures. Okay. And the name of this one is going to be original cost. So we'll go ahead and change the name. I can't type. All right, now you're going to click yes. We're going to track the depreciation. Okay. If we look here, we have the original cost and the depreciation. All right. And actually, we don't have to change the name to original cost for this one. We can actually probably leave it furniture and fixtures, because by clicking this, we're going to automatically create an account named original cost and depreciation. So the original cost is 40,000, and it's always going to be as of 23rd, 2023. All right, so what was the depreciation? The depreciation was 10,000. So we'll come over here and we'll enter the depreciation of 10,000 and enter the date of December 31st, 2023. And we'll go ahead and click save and close. Okay, so real quickly, I'm just going to go over this. And gave me a red flag because yes, there is already an account set up called furniture and fixtures. But I did not want to try and modify that account. I felt, it's better from experience to create your own new accounts. So if you come across this problem to where you're trying to save it and the name already exists, then all you have to do is you can just add like a little asterisk like I did here behind it, and click save. But if you look here, we have the original cost. So I didn't want to name it original cost because it would already show up as original cost under the account name. But you see the original cost is 40,000. Then you see the depreciation and went ahead and deducted the 10,000 out. And so now the value of the furniture and fixtures is 30,000. Now, the next one is it wants us to set up an account called long-term liabilities. So we can go ahead and look through, go up here and click new, click new. And so the account type is going to be long-term liabilities. And the detail type is going to be notes payable. All right, so it's already selected notes payable. Okay, so that's good. So when do you want to start tracking your finances from this account in QuickBooks? We'll click other and we'll just type in the date, or you can click right here, depending on it. But it's always going to be this date when we start setting these up. All right, because remember here, it's always going to be as of December 31st. So what is the amount it wants to start the balance at? Is 60,000. So we'll come back over here and we'll enter the amount of 60,000. And hit save and close. All right, so if we look here, there is our checking. There is our furniture and fixtures. And there is our notes payable. All right. So the last new account they want us to create is our equity account. All right, so we're going to come over here and click new. Account type is going to be equity. All right, detail type is going to be common stock. So we click here and we'll select common stock. Again, always going to select other. And the balance is going to be $1,000. Again, you can just click the asterisk and click save. Okay. All right. Now that we've set up our new accounts, and now it wants to create 2 new products and 1 new service. So how do we do that? You can come up here and you can click on your gear icon. All right, and then click on products and services. So then you click on your gear icon and you click on products and services. All right, so what we're doing here is we're adding products and we're adding services. Okay, so what is the first thing they want us to add? They want us to add a product. Okay, so the first product they want us to add is called Rook 15. Okay, so let's go down here and let's start by adding an item. So what we're doing is in this setting, we're adding a product, which is going to be an inventory. Products you buy or sell that you track quantity of. So I'm going to click inventory. The name of it is Rook 15. What else does it tell us? Initial quantity as of December 31st is 10. So on hand, 10 as of. Okay. What is the next set of information it tells us? It tells us there's an inventory asset account. All right, so inventory asset, this account will automatically be created in the chart of accounts when you add this product. All right. So it already has that selected, that's default. Select. All right, so the next it tells us is what is the sales price and what is the cost. All right, so we come down here, the sales price was 650 and the cost is 400. Let's double check those numbers, make sure that's correct. 650 is the cost, is the price, and 400 is the cost, excuse me. Next thing it tells us is the income account sale is going to be sales and the expense account is going to be cost of goods. So so the income account sales and the expense account cost of goods. Okay, good. That's already selected. All right. So once that's done, go ahead and click save and close. So if you see there, we have our first product. All right, so now it wants us to add a second product called the water hog. All right. So we can just come up here and click new. Again, it's a product. So we're going to click on inventory. The name is the water hog. All right. So according to this, the quantity is 8 as of December 31st, 2023. So come over here, quantity on hand is 8. Click our date. All right, so this also is going to be an inventory asset account. All right, so the price is 860 and the cost is 500. 860 and 500. So 860 is the sales price and 500 is the cost. All right, the income account is going to be sales and the expense account is going to be cost of goods. All right, so that's already selected by default. So we don't have to do anything there. So we're done with this one. We can save and close as well. And now we see both of our products on the screen. Then the second thing it wants us to add, well, third thing actually, this time there's going to be a service and it's called consulting rate. So let's go back over here to products and services. Again, we click new, but this time we're going to select service. Okay. So it says it wants it to be consulting. All right. And it's going to be $25. The income account is going to be services. So let's come over here. So we entered the sales price rate, which is 25. So let's go to the income account and let's see if we can see services. So I'm not seeing services. So let's go back over here to the instructions and see what it says to do. It says to click the add new account type. So let's look into this. All right, so services was not an option. Okay, so we're going to have to create an account and we're going to have to add the new account. Okay, so what you're going to do is you're going to scroll all the way up to the top here where you'll see the add new. All right, so it tells us that the account type is going to be income and the detail type is going to be service fee. Okay, so we already have income selected, so let's look for service fee income. All right, so once that's done, we'll click save and close. And now we have the income type is service fee income. We look back at the directions. And it's good. So now we can click save and close. All right, so now we have a service with the name of consulting fee, and it's got a rate of $25. Probably per hour. All right, now make changes to the following account via journal entry. All right, so now it's going to have us do a journal entry. So how do we do a journal entry? Okay, so from here, we're going to go and do a journal entry. So where do we go to do a journal entry? We can come right over here where it says the new, click on the new. All right, so all these options are going to pop up. All right, so we come over here and we see journal entry. So this is how you would be able to select to do a journal entry. Click on the new and then come over here and click journal entry. All right. So, and wants you to make changes to the following accounts via a journal entry. We want to call a journal entry 1 as of December 31st, 2023. So the first thing we're going to do is change the date. Okay. Okay. Journal entry number 1, the one's already in there, so that's good to know. So we don't have to make that change. All right, so what is the first journal entry? The first journal entry is to accounts receivable. So we're going to create a receivable in the amount of $5,000 for a new customer called Blondie's Boards. All right, so we're going to click on this. All right, so this is a drop-down menu. So we're going to come over here, we're going to select accounts receivable. Going to enter, it's going to be a debit entry because we know accounts receivable, when we set those up with a debit. Okay, and it's going to be to new customer. So when we come over here, it's going to be click new. The name is going to be Blondie's Boards. What is the type? The type is a customer. And go ahead and click save. All right. Okay, so if we look back to our instructions, the next line, they want us to do a journal entry to prepaid expenses. Okay, so we'll come back over here, click on account, click on our drop-down menu, and you will scroll down until we find prepaid expenses. Okay. All right, almost all the way to the bottom. Look at that. Prepaid expenses. Oh, let's change this. All right, now it's trying to automatically do a credit. We don't want to do that. So we're going to go click over here and click enter 3,000 for our prepaid expenses. Okay. All right, so the next one it wants to do is it wants us to create a payable. All right, so let's think about this for a minute. All right, our accounts receivable and our prepaid expenses were both asset accounts. Assets are already always set up with debits. Okay, so that's why we did debit entries to those two accounts, but accounts payable is a liability. So what increases a liability? A credit. Okay, so your accounts payable is going to be entered as a credit. All right, so let's go ahead and select our drop-down menu. There's our accounts payable. No, we don't want to offset with the 8,000. It's trying to do that because it wants all your debits and credits to balance, and that's okay. We're still going to do that. We're still going to balance our debits and credits. All right. Now this one, we have to create a new vendor. So we look over here. All right, we're creating accounts payable, and we're going to put it under Channel Islands, and it was going to be a new vendor. So we're going to click the new. Okay, Channel Islands. And this time we're going to select type. It's going to be vendor. And then just go ahead and click save. And there we go. All right. Now, obviously our debits and our credits don't balance. All right. We got about $3,500 difference. If we look here, we have more debits than we do credits. All right. So we know we're going to be doing a credit entry of $3,500. So let's go back to our instructions, and it says to do an offset to your opening balance equity. Okay, so let's select our drop-down menu, and let's see if we can find that account. All right, so that's a little trick. You know, that when we do the prepaid expenses, you know, I just scrolled and scrolled and scrolled until I found it. Another trick is you can start typing in the first few letters of the name of the account. And if it's already created, it should just pop right up. All right, so if we look here, it's already entered that $3,500 credit to offset it. So now all of our debits and all of our credits match. Okay, so we'll come over here and that's all it wanted us to do for this particular step. All right, so once that's done, we can click save. And we're going to go ahead and save a new. Why? Because if we look at step number 4, we're going to do another journal entry. So let's go ahead and click save and new. All right, and when we do that, it's going to create a journal entry number 2. So if we go over to step 4, it says close the opening balance equity account to retained earnings via a journal entry 2. All right, so all right, so technically we're supposed to close out the balance. So it says to close out the opening balance equity account to retained earnings via a journal entry. Well, we don't know what the balance of that account is, do we? No. So we need to be able to figure out what the balance of that account is, and that's real easy to figure out. Technically, we're not ready to do journal entry number 2, so you can go ahead and exit out. All right, and you're going to go into your accounting, and you're going to go to chart of accounts. All right, and we're looking for our equity account. So let's just go ahead and start typing in the name of that account. All right, so there is our equity account, and the balance of that account is $5,500. So that's the amount we're going to close out to retained earnings. All right, so let's go back up here to new. Let's click journal entry. All right, it's already got that journal date and that journal number still in there ready for us to go. All right. So the equity balance is sitting there as a credit balance, and we want to close out that credit balance to retained earnings. So if it's holding a credit balance, we close it out by entering a debit entry. So the first thing we're going to do is we're going to go ahead and find our equity account. There's our opening balance equity account. We're going to go ahead and debit it $5,500. All right, and we're going to close it out to retained earnings. And there's our retained earnings account, and it already fills in the blank for us. And once that's done, we can go ahead and click save. We don't have to click save and new because that's it. We're not going to do another journal entry. So we can just go ahead and click save. So journal entries 2 is now saved, and we can go ahead and exit out. So in step 5, it says to prepare and print a trial balance report as of December 31st, 2023. So what we're going to do not save it with that name of 2017. I think that is a typo. But what I would like you to do is we're going to go ahead and run the report, and I'm going to show you how to save it as either a PDF, a Word, or an Excel document, because you're going to use this to attach to your assignment that you're going to submit to me for grading. Okay, so how do we do a trial balance report? All right, so we come back over here, we see on the side over here, we have reports. Go ahead and click on that, and you're going to see a whole bunch of different reports that you can use. Okay. So we're actually going to scroll all the way down here to the bottom, and you see trial balance. I want you to go ahead and put a star there because that's going to create a favorite for it, so you don't have to constantly look for it, and click on trial balance. All right. So we need to adjust the dates. So the first thing we're going to do is we're going to put it in the dates. All right, and go ahead and click run report. All right, now the first thing I want you to do is in your assignment, it gives you what your trial balance should look like. All right, so the first thing I want you to do is I want you to go line by line for each account and compare it to the trial balance in your assignment. Okay, this is a checks and balance to make sure you didn't skip any steps and that you entered everything correctly. All right, so if you see here, it looks good. All right, everything looks good. So you can click export, and you can either export to Excel or export to PDF. I will take either. I will take either. I prefer PDF. It's cleaner for me to see, but I will take either. So when you export to PDF, you can just click Save as PDF. All right. And then you'll be able to open it up. And then you can save it. At this point, you can click and save it. I would prefer how you save it is trial balance case 1, chapter 3. Right. And you can save it on your desktop, wherever you want to save it. But then that's what you will use to upload for your assignment. All right. It also tells you what happens if your trial balance should differ from what is shown in the figure. All right, so make sure all your chart changes were dated the same date, which is December 31st, 2023. Click on the debit or credit balance to view transactions. That's interesting. So let's exit out. Let's close out of this. So what does it say? So if you had one of these numbers was different, and you're trying to figure out why it was different, if you look at it, when I move my mouse over, it gives you a hyperlink and you can click on it. And when you click on it, it shows you all the transactions in that account. Okay. And you can try and figure out, oh, maybe I hit the wrong account, or selected the wrong account, or I entered it as a debit and I should have entered it as credit, etc. You're always welcome to reach out to me and ask for assistance, like, hey, what did I do wrong? Or I know what I did wrong. How do I fix it? And I'll be glad to help and walk you through it. All right. Now, the next thing I want you to do is export it. It says to export it as an Excel, but again, I will take it as a PDF or Excel. It's fine. And then it also wants you to prepare a transaction detail by account. So I want both of these, run both of these reports, export as either Excel or PDF, and you will upload both reports to me for each assignment. So we'll go back to reports. All right. So you see here, I did that. I selected the star for trial balance and moved it up here to my favorites. That way you're not having to constantly scroll all the way down to look for it. All right. So the next one we're going to do, we'll go ahead and click that star, make it a favorite, transaction detail by account. And again, you're going to enter the date of December 31st, 2023 to December 31st, 2023, and click Run Report. All right, and this is just a detail of everything that you did. And again, you'll export this as either an Excel or a PDF, save it to your desktop, and you will upload that as an attachment to your assignment in Blackboard. So when you click on this hyperlink right here for your assignment, okay, it says attachments. So to be able to attach the files, you'll just basically click browse local files. You'll click this and it'll give you the option to upload a file from your computer. And so you will want to upload your trial balance and your transaction detail report. Okay. And then once that's done, you'll click submit. And then that'll submit it to me to know, and then I will get a notification that you've submitted your assignment and it's ready for grading. All right, so as you can see here, it tells you the due date. The due date for Chapter 3, Case 1 is January 23rd. As the same due date for your Chapter 3, Case 2, which will be another video I will upload, and we will go through the steps of doing Case 2. Now, again, you have two companies, a company A and a company B that you should have set up by now. Company A, you will use for all your Case 1s. Company B, you will use for all your Case 2s. We're going to rename them Case 1, Case 2 to help you remember which company to use for which case. But at the end of every chapter, you'll be assigned a Case 1 and a Case 2. And that's what you will be utilizing for your assignments. Okay, so stay tuned. I will be uploading a second video. We'll be doing Case 2 for Chapter 3, walking you through the steps on how to complete that as well.